and this is a highly audited area, by the way, because a lot of people take it without understanding that whether or not they qualify. Um, so there's two tiers. The first is, that first number one there is a 750-hour rule. And you have to be in a real estate trader business for more than 750 hours per year. So that would be about 15 hours per week. So, real estate agent, um, it would qualify. I, I don't know why I'm blanking on other professions, but there's a lot out there. Um, and then it has to be more than 50% of what you do. And so a lot of people are disqualified because they're getting a W-2. And a W-2 is usually about 2,000 hours or more. And
Mm,
so it's really tough to qualify as a real estate professional with a W-2. In fact, if you do it and you have a W-2, I would just say you're going to have a pretty high chance of audit, because the IRS is going to pretty much say you're probably not a real estate professional, so don't take the status. But so that's rule number one. You have to have 750 hours as a real estate professional. Number two is to get the income from your rental properties to be treated as active. You have to materially participate. Now, there's a lot of different ways to do this. In fact, there's 7 ways that the IRS has outlined that you could qualify as materially participating. But the most clear-cut one is getting 500 hours in your rental activities. Now, the nice thing about this is it doesn't have to be 500 hours per rental. So if you have 3 single family houses, you don't have to have 1,500 hours invested into all of this to use the depreciation. There is a grouping election you can do. And I definitely recommend it. And what's great is if you do materially participate and have over 500 hours total across your rentals, you can start to invest in syndications and other passive investments and group those with your active ones. And so really it's not like you have to get like you don't have to have every single property do this. So really you just have to hit that 500-hour thing. So you could be for example, I mean, you could be a property manager who manages their own property and then everybody else's, other people's as well. And as long as you're managing your own properties and working more than 15 hours a week on average, you could qualify as a real estate professional. And so, like I said, there's a grouping election. That's number 3. And then we talked already about the tax benefits, but really it's just meaning that you can use your losses from real estate to offset your active income.